Do you have a faucet that leaks or kind of drips? Well, that's no fun. That can be really annoying. But drips in investing could be a lot of fun and something you might be interested in and can be serve you very well. So what is a drip? It's actually a thing. What is a drip? A DRIP is a dividend reinvestment program. That's what it stands for, dividend reinvestment program. So what's involved with a DRIP is you're buying stock directly from the company itself. So if you're interested in stock A, you would go to that company and typically online, you can order stock directly from the company. You don't have to go through a discount online broker or a full service broker or a financial planner or anything like that. I can just buy stock directly from the company. And boy, isn't that a great cost savings potentially by buying stock directly from the company? It sounds great. And the reinvestment part is its dividend reinvestment program is the idea you're buying. This would be mostly for, there's a couple out there, I can't remember who they are, but it's mostly just a few, and it's only a few dividend paying companies that allow you to buy their stock directly, and then you can reinvest the dividends in the company or cash them out too. And that's why they're called a DRIP or dividend reinvestment. You're buying the stock directly from the company and then reinvesting those dividends right in the company too. So it sounds great. Now here's the downside of it. One, it's very rare. It's very rare for companies to offer because they don't want to manage all that. They want to be listed on a stock exchange, have people buy and sell their stock on the exchange, and then they pay out the dividends to their shareholders or their owners, in effect, like normal. They don't want to have a separately managed thing with employees trying to manage this whole investment thing of this DRIP or dividend reinvestment program, because while they're doing the DRIP, they're still listing on the exchange. They're still paying out dividends directly or paying out dividends to the shareholders who bought through the exchange, bought the stock individually, or maybe own stock as part of a mutual fund or exchange traded fund. So they're doing all that already. So they don't like the idea of creating a DRIP just to handle this small group of people directly. But some companies do offer it, and it's a great way to buy stock, particularly if you like a particular stock. Check out to see if it offers a DRIP. Typically like a big Fortune 500 company, a Fortune 100 company, good long-time paying dividend companies, they might offer a DRIP. So when you're on the website, what you're looking for in the investor section is you're looking or searching for DRIP or dividend reinvestment program. One thing when you look at the dividend reinvestment program, if you find a company that's offering it that you're interested in, is really look closely at the minimums and other details such as fees closely, because it's usually a pretty good deal, but understand it might not be, depending if you have to maintain a certain minimum or what you might have as far as rules around, that you have to reinvest the dividends, or can you cash out the dividends, or how long you might have to hold the stock for. Remember, they're just making up a special deal for you outside the market, so they have a little bit more control on the liquidity and the other rules around that stock. So you buy a stock on the stock market, you could sell it 2 hours later or 2 minutes later, where if you buy it through a DRIP, there might be limitations around that. Also, you buy in a stock market, there might be different types of minimums out there as far as just needing to be able to buy the stock, whereas in a DRIP program, it might be a real hefty type of minimum. And it all varies by companies. There's no standard with this, and only a few companies offer it. So I would say first thing is do your due diligence, look at companies, and if you're looking at dividend investing, narrow your field down to dividend investing stocks. And if you've got a couple in mind, check out their website. You'll be doing it anyways, doing your due diligence to research the company. But it might be worth it to go to the investor relations section of the website or of the company information page and find out, or you can just ask them directly, send them a note to the investor relations section. They usually have an email you can send quick questions to and ask, do you have a DRIP or a dividend reinvestment program? If they do, it'll be right there on the website, and you can usually pull up the document and you can see what are the different minimums and things involved. So DRIPs, rare, but if you find one and you like it, might be a great way and a little bit different way to invest in stocks, and particularly looking at dividend stocks that will then be reinvested.